there, I'm Lindsay Biscaya. Welcome to Market Call. Colin Cieszynski is on the show today. He's portfolio manager and chief market strategist at SIA Wealth Management, and he will be taking your questions on technical analysis. Here's how you can reach us. You can call us toll free, 1-855-326-6266, or you can send us an email to marketcall@bnnbloomberg.ca. And Colin joining us in studio today. It's great to have you in.
Oh, thanks. It's good to see you, Lindsay.
Yeah. Okay. So we've been in an interesting couple of weeks here, and really at a turning point, I believe, today. You're saying that, the next 24 hours could potentially be very significant in terms of the direction the markets are going to go in.
Absolutely. What we've seen over the course of the last 6 weeks since the war started was we've had some quite violent movements in both directions. And of course, we've had a big rally in oil prices, which is to be expected because they were pretty low before the war started. The market itself has had up days and down days, but overall, it's been more range trading than directionally upwards or downwards. So we've seen this depending on, and for hour to hour, I mean, when I was getting ready to come on today and was speaking with your colleagues, I started to write something up in the morning and the market was going one way, and by the time I was done, the market was going the other way. And so we're getting quite a lot of big swings, even hour to hour and tweet to tweet. But overall, today we might get a better idea of, so once we hit this deadline, then what? And market's been kind of waiting for that.
Yeah, you can't predict it. It's literally like, it feels like minute by minute, right? When you say range trading, is that what you mean? What do you mean by range trading?
Range trading is that we haven't seen the stock market really take off or really crash. It's just up and down and up and down, and generally in more of a sideways trending range.
So maybe some more clarity later today. Obviously, a very serious situation on our hands given this 8 p.m. deadline. Other than that, though, earnings season is about to kick into high gear again in the next couple of weeks. And you say that could really also determine the direction of the markets. Is there anything in particular you're really watching for with this latest earnings season?
Well, what I'm watching for is to see what companies say about how has the war affected the economy, because we don't really know. Since the war started, almost all the economic data except employment has been from before the war started, so we don't really know. And there's been some survey data, and again, we don't really know. But the quarter that ended will have 1 month since the war started, and then all guidance going forward. So for the first time, we're going to get, and other than that, it's been kind of the war has been in the kind of the 6 weeks of the quarter where there's not much news from companies and there's not much economic news. So it's all been in a vacuum and everybody's been fixated on the war. But next week, we'll start to, and over the next 2-3 weeks, we'll get a lot more responses from other people, from a lot of companies will be reporting how has the war affected their company, their industry, the economy in general.
So with all that being said, hard to predict the future, hard to predict what might be more safe at the moment, but are there, and obviously we'll dive into this, I'm sure, throughout the show, any sectors you like or anywhere that you really, really are staying away from right now?
Oh, it's interesting because I was just looking at the relative returns of sectors over the last month and over the last week. And interestingly, although again, we've had a lot of volatility, but the markets have been a little bit more constructive over the last week or so, and we've seen support. So that's why I say we haven't, it hasn't been wonderful, but it also hasn't been terrible. But what we'll see with this is that, generally speaking, when war fears have ramped up, then we've seen energy do well. We've seen non-mining materials do well, so the chemical companies, steel companies, things like that. And at the expense of other, and things like utilities as well, some of the more defensive areas. And then when people have become a little more confident, then we see industrials bounce back, metals bounce back. So there's a lot of back and forth, and we've had over the last while in terms of relative strength within sectors, depending on which way things have gone. There have definitely been winners and losers.
Okay, a lot to talk about. We are going to take a quick break right now, though. We'll be back with Colin Cieszynski of SIA Wealth Management, taking your questions on technical analysis right after this. Stay with us. Welcome back to Market Call. Colin Cieszynski is on the show today answering your questions. We'll start with an email question, so we'll go to the inbox. This one's from John, and it reads, can the host provide his analysis of Alimentation Couche-Tard? So, Colin, what do you think about Couche-Tard? It's a pretty big company. Or is it doing okay right now?
It's doing a little better right now than it has been. It's been swinging up and down in a range between, let's call it about 68 and about 84 for the last couple of years. And it had been declining through into early 25. And since then, it's slowly but surely been working its way back up. But we can see it's picked up since the start of the year. It's more what we call more of a defensive retailer, being in gas stations and convenience stores. And of course, we have seen the price of gasoline pop in, really go up in the last few weeks. I'm quite amazed. And anyways, it's so right now it seems to be holding its own in the high 70s. We'd be looking for resistance up in the low 80s, and it looks like support around 77 right now.
So thinking, if you have Couche-Tard, maybe a hold. If you don't, maybe not a buy at the moment. What do you think?
No, it's fine. It's been acting pretty well overall, and it's generally well supported, working its way up. It's just hard to tell how far it might go.
Yeah, for sure. Okay, we're going to go to the phone lines now. Tyler is calling in from Toronto with a question. Hi, Tyler.
Okay.
Hi, Lindsay. Hi, Colin. Please and thanks. Your opinion on Northland Power. I identified this a few weeks ago, but didn't pull the trigger owing to seasonality, and then this war thing kind of derailed my idea, but it continued its upward march. Generally speaking, these extreme events, do you find that technical analysis still holds up? Because I have a few stocks that looked great up until a few weeks ago, and then they entirely derailed. Northland Power, continuing its upward march, maybe it's propelled by the alternative energy space. I was wanting to get your opinion on technical analysis in times like these, and how does Northland look right now? Thanks.
Okay, thank you.
Thank you. Right now, it looks like it's still forming a really nice base. This is what we call an ascending triangle, where you see a series of higher lows below resistance at a fixed point. In this case, it's $25, and it is creeping up towards the top of that. If it gets through $25, would be a very major technical breakout. But right now, nice base forming, and it's really well supported. And in this kind of a volatile situation, utilities do tend to attract interest as these lower, less volatile sectors of the market.
For sure. Okay, so we're going to go back to the phone line. Stephen is calling in from Calgary with a question. Hi, Stephen. What's your question?
Hi there, Lindsay. Cho. Colin, I'm wondering about Pembina Pipelines. It has an attractive yield and announced a profit growth forecast today. What is your technical take on this stock? Thank you.
Okay, thank you for the question.
Thanks. It's looking really good technically right now. We can see it bounced off of a higher low in the low 50s towards the end of the last year. It's now broken out over $60 to a new all-time high, and is working its way higher. And when we look at energy right now, we're seeing strength across the board. We're seeing strength in integrateds, in producers, in pipelines, in services, in midstream, in everything related to energy is running right now. It's a very, very strong sector move.
There's a bit of a trickle-down effect right now too, right? In terms of like companies and sectors that are benefiting from what we're seeing and those that are not. So it's interesting to watch that.
Absolutely.
Yeah. Okay, so we're going to go back to the phone lines. John is calling in from London, Ontario with a question. Hi, John.
Hi, Lindsay. You're a breath of fresh air on there today. Good to see you this week. Colin, I'm looking for advice on the data storage stocks. They've held up pretty well despite the pullback. And, SanDisk is the number one stock in the S&P this year. Micron's done very well as well. What do you think of Micron for maybe a small add in these precarious times? Thank you.
Okay, thank you. Micron Technology. Look at that chart.
Yeah, Micron had a huge run. It had a big rally up until it was added to the S&P 100, and then it kind of dropped back. And you expect a certain amount of consolidation when just after something is added into the index. So it's a case where, right now it's been looking good. It's been it's looking supported, but it does look right now like it's in a consolidation phase following the index addition added a lot of buying. All of the index tracking ETFs had to buy the stock. And so now you're kind of in this hangover. So right now it looks like it's in kind of a 325 to 425-ish trading range, and is hanging around the middle of that. But all things considered, when you look at the run it's had, it's still pretty well supported.
Yeah. Okay. Yeah. Alfred now calling in from Mountain View, California with a question for Colin. Hi, Alfred.
Yeah, hi. Thank you for taking my call. My question is on Berkshire Hathaway. I bought it about a year ago, and it's been trading kind of sideways. I'm a long-term investor. I appreciate your take on it. Thanks.
Okay, thank you. What do you think?
Thanks. So what we're seeing with Berkshire is actually a bit of the opposite. When I talked about the Northland Power and the base that was forming, this could be a top forming. It's hard to tell, but we are seeing a series of lower highs kind of over the last year. So this right now is a stock that I would call neutral with risk to the downside. So it's at 478. If I started seeing it taking out, say, 450, it could be in trouble. And we have seen some relative weakness in the insurance sector over the last number of months. We had seen in our portfolios, we didn't own Berkshire, but we did own other insurance companies that we actually had rotated out of as that sector was weakening.
Okay, so something to watch for sure. I'll be a little cautious about. We're going to take another quick break. When we come back, though, we'll come back with Colin Cieszynski of SIA Wealth Management taking your questions on technical analysis. Here's how you can reach us. We'll be back in a moment. Welcome back to Market Call. Colin Cieszynski joining us on the show today to answer your questions. We're going to go straight to the phone lines. Jeff is calling in from Ottawa with a question for Colin. Hi, Jeff.
Yeah, good afternoon. I'm just wondering, Colin, what do you think about Reddit?
Reddit right now technically just kind of looks like it's going sideways. It's had a pretty substantial pullback. I mean, it was up above $200. It's come back now down to about 140. It does look like it could have some support around 120. So it looks like it's had a pullback and is stabilizing, but it hasn't really turned up yet. If I started seeing that going up through closer to or heading up through 150 would start to look quite encouraging. And right now it's kind of in 120. So it's had a pullback. It looks like it's stabilizing, but it doesn't look like it's started to go up yet.
There's no clear reason as to why it would go up to 150 is kind of what you're thinking?
Yes.
Yeah. Okay, we're going to go back to the phone lines. Frida is calling in from Chilliwack, Tamarack Valley with a question. Hi, Frida.
Hi there. I'm just interested in your opinion and analysis of Tamarack Valley. Thank you.
Thank you. So Tamarack Valley is a stock that we do hold in a number of portfolios, including the BMO SIA focused Canadian equity fund. That's ZFC, and that's one of the holdings we've had in that for quite some time. And it's had a run. We're really happy with it. Obviously, it's doing extremely well. It's one of these ones that it's a junior producer. Junior producers have done well and have benefited from this big rally in the oil price. So technically, right now it's on a run. It's in an uptrend. This is one that will definitely be influenced by swings in the price of oil. But important for us all to remember too is that the price of oil before the war was $65 to $75. So at this point, whether it's trading right now up above 110, even if it pulls back into the 80s or 90s at some point, it's still much higher than it was before the war started, and that's beneficial for the company. So it's good for us to remember that. So right now, it's a stock that's been acting really well, and we've been really happy with it.
Yeah, for sure. Okay, we're going to go back to the phone lines. Robert is calling in from New Brunswick with a question. Hi, Robert.
Hi. Thanks for taking my call. I was wondering if you could give me your technical analysis doing the Fibonacci extension and retracement on silver. And is there one technical analysis that you rely on more than another? Thank you.
Okay, thanks for the question.
Thanks. So at SIA, we use point and figure charting, and we use relative strength. So we measure every night. We look at head-to-head battles between every stock in the universe, all the stocks in the TSX, all the stocks in the S&P, asset classes, commodities, mutual funds, exchange-traded funds. We look at everything. So we use relative strength to see who is winning all these head-to-head battles, tells us where is money moving. And so that is what we primarily use as our main analysis. In terms of indicators, after that, we tend to look more at a combination of indicators. Rather, there's no single indicator that's going to work at any given point in time. So what we do instead is that if we do look at indicators, we look at a combination of, is there a group of indicators that are lining up to tell you something? But our primary analysis and decision making is all based on relative strength and point and figure charting. So silver. Silver has had an enormous run here. So it started about let's call the breakout was 35. The peak was, this is May, but let's call the peak for this contract was about 95. And so when we're talking about Fibonacci retracements, there's three that we look at. And the idea is that you take the length of a move and you would say, okay, if you're going to get a retracement, there's 38%, there's 50%. I know we can't read this very well, and there's 62%. And so at a bare minimum for the purposes of this discussion, let's go with the 50%. So if you had a move from 35 to 95, that's a $60 move. So half of that would be 30, and you would say your 50% retracement off of a $95 high would be approximately $65. Give or take. So that's what we're looking at here. You're sitting about 71 on the silver futures right now. And so you're kind of coming back towards you've probably done pretty much the 38% retracement, and you're getting close to the 50 is what I would tell you on that. Silver had a massive, unprecedented rally.
The beginning of this year, right?
Yeah.
Was that, oh my gosh. Yeah, silver was following gold in that rally. That's pretty crazy to see that chart.
Absolutely.
Okay, so we're going to move on now. Costa is calling in from Montreal with a question for Colin. Hi there. What's your question?
Hi, Lindsay. Hi, Colin. Thank you for taking my call. Constellation Software. Talk to me about all you could see on the beautiful chart. Thank you.
Thank you. Okay, Constellation Software. Let's take a look at the chart. And what do you think?
This was a stock that was doing really well for a long time until it wasn't. And it was one we used to own in some of our portfolios. And then when the relative strength came off, we sold it out and it crumbled. And it's crumbled a lot. It's gone above $5,000 to down close to 2,400. I mean, it looks like it's trying to stabilize. It did pick up. I mean, it was right down at the bottom of the relative strength rankings, and it kind of came back up to the middle. It hasn't gone up to the top. It did a little bit better, but at that time, it looks more like a stock that has had a big sell-off and a bit of a bounce, but it hasn't shown enough to convince me that it's really going yet. And it still looks like it's had a bounce just because it got oversold than because there was any kind of a change. So we just got to watch it at this point in time, because if you look back at the very beginning of this chart on the left, you can see there's periods where it just goes sideways and does nothing for a while. And it may need to do that for a while given the magnitude of the sell-off it had.
Interesting. Okay, we're going to take another quick break right now. When we return, though, we will take a look at some of Colin's past picks. That's coming up right after this. Welcome back to Market Call. We're going to go through some of Colin Cieszynski's past picks now. These were from November 18th, 2025, so over a year ago. Your first one, Colin, was Power Corp. So when you recommended it, it was at $68.31. Now it's at $68.19. Total return, though, of 2% ever since November. What do you think about this one?
This one and some of the other ones we owned, there was a huge change when the war started at the end of February, and we saw a huge sector rotation. So we had a lot of things that had been doing relatively well into that point, then started to weaken. So one was in insurance companies, and we did see a slowdown in the insurance sector, at which point in time, as the relative strength deteriorated for Power Corp, we sold it about the time that the war started. So it has come off. In terms of the stock now, I mean, so we don't own it anymore in any of our portfolios. It's come off. It did have a pullback, and now it's just kind of going sideways and not doing much at the moment.
Sorry, I said over a year ago. I don't even know what year it is anymore. So I meant just about 6 months ago these past picks are from. Okay, so we'll move on to your next one. That was Alphabet. When it was recommended, it was at $284.28. Now it's at $297.93. So total return of 5%. This one's doing pretty well. Obviously, these hyperscalers not maybe doing as well as they were, but still staying on top.
Absolutely. So what happened with Alphabet was it did really well. And we can see in the chart here up until the end of the year. Now, since the beginning of this year, the U.S. mega caps have underperformed the large caps. So let's say within the S&P 500, the 100 biggest stocks have been underperforming relative to the other 400 since the beginning of this year. And so that's important. So it's not just Alphabet. It's the whole Magnificent Seven has kind of underperformed
Yes.
since the start of this year. Relative strength deteriorated. Again, this is one we sold a little over a month ago, but it had it come off and it's just kind of holding. And it's Alphabet and some of these other ones are so big, they're kind of a measure of general sentiment towards the overall market and towards large cap stocks. So again, it's one where it's come down, it's had to bounce a little bit, but it's really unclear where it's going. And as I mentioned, its relative strength has deteriorated quite a bit in the last few weeks.
Why do you think that is? I mean, like obviously some of these real big companies, they're spending a lot. People are a little bit cautious about that. Or is it just the transition that we're seeing in terms of this AI story, where maybe the story this year is more in terms of like the companies that are building the materials needed for AI rather than the big hyperscalers at the top?
Yes, and that's something we've seen. They led it,
Yeah.
and now they've kind of consolidated, and the focus has shifted to other companies and to other areas. And we will see that in relative strength, where you can see that something could go flat or just a little bit lower, but it gets superseded in the rankings by things that are moving up quickly.
Yes.
So we've seen a huge move up in energy stocks, but also in utilities. And we talked a little bit even about utilities are a play on some of this AI as well, because they're going to need power.
Yeah.
And so it's just, the focus within the AI has moved to other areas, whether it's materials, utilities, and energy.
Okay, your last one is General Motors. So when you recommended it, it was at $67.93. Now it's at $72.31, total return of 7%. Are you still holding this one?
No, we sold this one as well. And same thing, right after the war started. Right after the war started, we had a really, really significant change in direction in the relative strength of sectors. And one of the ones that did get hit fairly hard was the automotive sector on both sides of the border. So we had General Motors came down, Magna came down as well. They all got hit when the war started. And in consumer discretionary stocks, in general, those parts of the cyclicals, they all sold off. So as we saw the relative strength deteriorate, we exited it. Up until then, we were very happy with it, but when the money flows change, we change.
Love it. Okay, we're going to take another quick break right now. When we come back, though, we'll be back with Colin Cieszynski of SIA Wealth Management, taking your questions on technical analysis. We'll be back in a moment. Stay with us. Welcome back to Market Call. Colin Cieszynski is in studio today taking your questions. So we'll go right to the phone lines. Jerry's calling in from Toronto with a question. Hi, Jerry.
Hi, Colin. I was wondering about freehold royalties. I have quite a bit of it. Actually, it funds about 25% of my retirement income. And I sort of like it. It pays a nice dividend. And when you do a technical analysis, do you look at the dividend also, or you just look at what the price does on the stock? Or do you add or take that into consideration? Thank you.
Great question. Thanks, Jerry.
That is a fantastic question. And the answer is yes, we factor it into our pricing when we do look at price charts at SIA, absolutely. Do we sit there and say this stock has a higher dividend yield or a lower dividend yield? Not so much. We don't, that for us, when we do our investing in the portfolios that we sub-advise as for BMO and also for the, anyways, we don't look at that particularly as a factor, but we do. But it does get incorporated when we're doing our technical analysis and our pricing and our relative strength analysis. So because if you didn't and it worked out, then something might look like it's not performing as well as it actually is. So it does get factored in, but not in the at more of an underneath level than a headline level. Anyways, on freehold, you're having a really great run here. It broke out. Your breakout point was about $15, so that would be your support. Oftentimes, when people have a stock moving up like this, some people will consider having a trailing stop, maybe 15, 20% below the high. But same time, if it's something that you're holding for the dividend, then it's a long-term hold anyways. But right now, it's the trend is in your favor.
What is a trailing stop?
Oh, so if you have, say, a stock, you might put your stop 10% behind the market. So if the high is at 20, then you might say have your stop at 18. And if
Okay.
it goes to 21, then you move your stop up to 19, more
Got
or
it.
less.
Got it.
That kind of thing. So you move your stop up as the market goes up.
Understood. Okay, we're going to go back to the phone lines. Jake is calling in from Vancouver with a question for Colin. Hi, Jake.
I'm asking about Lyondell LYB on New York. It's had a great run since early the new year. Would you take your chips off the table?
Thank you.
Well, right now, with chemical stocks, the whole chemical sector has been doing, and fertilizer sector has been doing extremely well everywhere. So this is a sector right now that is in favor, that is collecting capital and attracting capital from other areas. It's performing really, really well. The group on a relative strength basis. This is one the stock's been doing quite well. It's in the top quarter in relative strength rankings. So at this point in time, the trend is in your favor. We'll see what happens with the war developments as things go forward. But you can see from this chart, the low is set in the 40s. And you're at 80 right now. You've just broken out over some former resistance that was about 75, and you're just consolidating nicely with good support around 80, and then your next resistance is up closer to $100.
Nice. Okay, Kevin is calling in now from Kingston, Ontario, with a question. Hi, Kevin.
Hi, thank you for taking my call. My question's on Western Union. I'm just wondering, it pays a pretty high dividend, which sometimes is a warning sign. Do you, apart from technical analysis, do you also look at balance sheets and the story of the stock? And would you be buying it at this price? Thank you.
Okay, thanks for your question. Western Union, 10% dividend at the moment. What do you think?
At SIA, we believe that the fundamentals get factored into the price of the stock, and that stock prices anticipate future fundamentals. So we do. So for us, we feel that gets picked up in the capital flows and in relative strength analysis. And it's something we'll see oftentimes, that you'll see a stock that's done. It amazes us how many times we see a stock that has dropped down in the relative rankings, and it's gone into the lower half and in the red zone where we don't invest in them. Mm-hmm. And then we see a negative earnings report come out and it drops like crazy. And it's like, wow, another one we sidestepped. But oftentimes the price will tell you when the fundamental trend is changing. So we factor it in through another way. But for us, it's price and relative strength and trend is most important. So looking here at Western Union, you were in a downtrend. You do look like you're basically bottoming out, trading in an $8 to $10 range. It is creeping up a little bit. We are starting to see some higher lows, so that's encouraging. For it to really get going, you're at about $8.95. You'd want to see it taking out that previous high up closer to $9.50. If you do that, moving up through $9.50 or $10, that this thing could be turning around. So far, it's looking a little bit encouraging.
All right. Okay, we're going to go back to the phone lines. Bobby's calling in from Newmarket, Ontario, with a question. Hi, Bobby.
Hi, can you hear me?
We can hear
Loud
you.
and clear.
Perfect, thank you so much. So my question was around the stock Celeste. Quite often I see going from 380 and selling it every morning 420. So what's the short term and long term for this stock, Celestica?
Great question. Could we bring up a one-year chart for this one, please?
Yeah, we're getting that for you, because even just in the last year,
it's been quite. Right. So if we look at this here, I mean, it was in a really, really nice long-term uptrend till about the end of the year. It's now in a sideways range, very sideways range, in fact. But you can see it's tested resistance support. It's tested support around, that looks around 340, 350, and that's been tested multiple times with resistance probably up near 500. You were trending downwards, and you're starting to creep back up. We'll see how things go with the overall market, but so far, it looks like you're in an upswing within a sideways trend, is what it looks like right now.
So relatively good news.
So yeah, it's not bad.
If you want it, yeah. Okay, so we're going to go back to the phone lines now. Debbie is calling in from Burnaby, BC, with a question. Hi, Debbie. Hello? All right, I think we lost Debbie, but I do know Debbie was going to ask about Brookfield Asset Management. So just in technical analysis of that company, what do you think?
Absolutely. So this is when the relative strength has been weakening for quite some time. It was in an uptrend until about the middle of last year, and now it's been in a fairly consistent downward trend for the better part of 9 months. It still looks like it's under distribution, just steady selling, steady declining. It is approaching a former resistance level that could be support near 60. If it takes that out, you're probably looking at the mid to low 50s next for Brookfield. But right now, it looks like it's just kind of drifting downward.
Yeah. Okay, we're going to take a quick break right now. We'll be back, though, with Colin Cieszynski of SIA Wealth Management, taking your questions on technical analysis right after this. Here's how you can reach us. Welcome back to Market Call. Colin Cieszynski's on the show today, taking your questions. We're going to go straight back to the phone lines. We've got Doug calling in from Duncan with a question. Hi there.
Yeah, good morning. Thank you for taking my call.
Hi, good
I
morning.
was wondering about Cardinal Energy. Even before the war, it was just chugging along. The stock price was doing well. It pays a good dividend. I just wondered what your thoughts were on it.
Okay, thank you.
Sure. So right now, as I've been talking with energy stocks, it's been a good time to be in the juniors. They've done really, really well. Again, with a case like this, you might want to consider a trailing stop, but otherwise, this has been a good hold stock. It's been on a tear for the last year or so. And so at this point, it's around just under $12. So support's probably moved up to around $10. And as long as the price of oil stays high, this may continue to attract interest. It's a trend is your friend right now.
No kidding. Okay, thanks for that. We're going to move on. Amin is calling in from Ottawa with a question. Hi there. What's your question?
My question is about Bombardier for my guest. Thank you and have a nice day.
Okay, thanks, Amin. Yeah, Bombardier was having quite a bit of a run as well. What do you think?
Absolutely. So Bombardier had a fantastic run. It's had a correction, and now it just seems to be stabilizing in and around 250, say support about 240, resistance probably about 280. It does look like it's kind of moving into more of a sideways range from an upward trend, but we are seeing that with stocks in the sector, right? We've got, it's aerospace and defense. And so right now it's a time of war. There's been a little more emphasis on the defense side rather than the aerospace side. And we've seen that in our portfolios over the last little while, that there has been rotation away from kind of the airplane manufacturers to more the defense contractors. So that's something to think about. But
and Bombardier was also like a target of Donald Trump's for about an hour or so a couple months ago or earlier this year, right? So that's always something to keep in mind too, whether that loops back around and he starts thinking about declassification again.
Absolutely. Right. I mean, it does get stocks in this area, whether it's Bombardier or Embraer or Boeing or whoever, they get impacted by shifts in politics as well.
Yeah, for sure. Okay, we're gonna go back to the phone lines. Robert is calling in from Burlington with a question. Hi, Robert. Okay, we might have lost Robert as well, but I do know that he was going to ask about IBM. So we'll just put that question right to you. There's the 3-year chart of IBM. What do you think?
Absolutely. So IBM was doing quite well. It was trading up above 100. It did get knocked back at the beginning of the year, looks around the time of its last earnings report, and now it's just consolidating around 240. So if it continues to hang around here, then maybe it's to me, just seems like it's more of a sideways trend. Because you're at the bottom of it, I'd be concerned if it was started to fall through the bottom, say, took out 235, that could be seen as trouble and more selling pressure against it. On the other hand, if we see it start to creep above 250, that would be encouraging.
Okay. We've got an email question now. This one is from Altino, and it reads, I have a position in Palantir, and I'd like to know if the guest can provide insight on their fundamentals. Is this a hold, or could I add to my position at this level? Thanks for that question. What do you think?
Hi. So Palantir had a great one. Could we shift this to a 1-year chart, please?
Yeah, we'll get a 1-year chart for you.
Thank you. And I will just note it here. So, I mean, Palantir is another one of these stocks that had a massive run, and now it's just kind of consolidating. But we can see since it peaked in November, it's still in a downward trend of lower highs. And even though it's gotten some support in the last month or so, it hasn't broken out. So at this point in time, I would say it's still in a neutral to lower trend. You'd probably want to see it getting at least above 150, even probably 160 before it would start to look more encouraging.
So you're a hold at this point.
Yeah, it's just kind of looks like it's grinding its way sideways after a big pullback.
Yeah. Okay. We've got another email question. This one is from Michael, and it says, "What does your guest think of Denison Mines for copper?" Denison Mines. Okay,
Denison
thank you
Mines
for that.
Copper is an interesting one because I've always thought of it as more of a uranium stock. So
let me look. Uranium. Yeah, you're right.
Yeah,
so I guess maybe for copper, not so much then.
Yeah,
but
more for
what
uranium.
Do you think about Denison Mines?
Denison's a uranium stock, and primarily, and that's what it's mostly known for. Uranium does have its ups and downs, but certainly there has been a resurgence in demand for nuclear power. So that has generally helped the sector, whether it's Denison, whether it's Cameco, or some of the others in the group. Technically, on a basis, it looks like it's broken out of 450 and held that support, so that's encouraging. Resistance is up probably around 550 at the moment. It may bounce around in that range, but so far it's looking okay.
Okay, we've got another email question. This one's from Brian, and it reads, "I would like your technical analysis comparison for Enbridge versus TC Energy." Okay, two pretty strong energy companies. Let's take a look at the two charts together. What do you think? Which one would you prefer?
In our relative strength rankings, they're usually pretty similar.
Right.
And they're what I call fellow travelers.
Looks like it from the chart.
Right. They tend to at any given point in time, they tended to be trending in the same direction. And at any given point in time, one might be doing a little better than each other. And in other points in time, that can then reverse. And so we can see of late, in the last 6 months, TC Energy had rallied ahead a little bit. Enbridge has been kind of closing the gap. So I'm kind of indifferent between the two. It's kind of like either you like them or you don't, and you can pick one or split your position between the two of them. It doesn't really. It's that's kind of the way you can think, and that's something to think about as well when you do get these things that are fairly similar, but at any given point in time, one outperforms for whatever reason is. You can just split your position between the two of them.
Yeah. Okay, we're going to take another quick break. When we return, though, we will be taking a look at some of Colin's new top picks right after this. Stay with us. Join us tomorrow on Market Call. Brian Madden will be on the show. He is Chief Investment Officer at First Avenue Investment Council and will be taking your questions on North American equities. And if you missed Market Call, you can always check out our daily podcast. You can find it on iHeartRadio and other platforms, and you can also watch full episodes on our YouTube channel. Of course, Colin Cieszynski is in studio today, and we're going to go through some of Colin's top picks. So Methanex is your first top pick that we're going to talk about here. What is it you like about this company? This is, as we talked about, kind of following the theme of what we've been talking about today.
Absolutely. So chemical and fertilizer stocks. Methanex has been doing really, really well. It's been climbing within the Canadian Relative Strength Rankings, the SIA Canadian Relative Strength Rankings. We've also seen Nutrien climbing up as well. Both of them are. I went through Methanex. This is a stock that we hold in the BMO SIA focused Canadian equity fund, which is ZFC, and it's been a really nice holding for us. It's moving up in the rankings, and so what's important here, and particularly as we move through this, something that I don't think a lot of people really knew about, and it came out in the last 6 weeks, was how much of the materials used in fertilizers move through the Strait of Hormuz.
Yes.
And how that all of a sudden, everybody just saw, oh, well, it's oil. Well, it turns out it's not just oil. It's oil, it's chemicals, it's feedstock.
So many materials.
So many things.
And that has become so apparent, as you say, in the last 6 weeks.
Yes, and I think it opened a lot of people's eyes to a lot of things that are happening. And just as we've seen the price of oil go up and stay up, even if it's miraculously reopened tonight, there's still going to be a lot of disruptions, catch up, and everything else in the market. So it's really important to note that, and companies that then are not exposed to the Persian Gulf and all these other materials may continue to attract attention.
And maybe, I don't know if you can speak to that in terms of like that catch up that we're going to have to be watching for. We've talked about that with a lot of guests in terms of oil and kind of how many infrastructure sites in the Middle East have been damaged and how there's going to be some time to repair those before we see things actually return to normal. What does that look like for fertilizer and those kinds of materials, right? Like, I don't know if you can answer that, but it's not going to happen overnight.
No, definitely not. I mean, it's probably similar timelines to what we might see for energy, and of course for fertilizer. It's important because people only plant at certain times of the year as well.
Yes, true. Okay, so your next pick is GE Vernova, a heavy equipment producer for power plants. So tell us more about this company.
Absolutely. So yes, it's the GE Vernova, of course, is the old electrical division of the old General Electric. Right. So it broke up and it split into the aerospace part and the power part. And both of them, to be honest, have been very, very right up at the top of of our North American and global relative strength rankings. And right now, GE Vernova is actually the #1 ranked stock, and we hold it in the BMO SIA North American Equity Fund, which is ZFN, and it's been doing really well. Nice accumulation. I love this chart here, where you get a rally, consolidation at a higher level, and another advance. I call this the staircase pattern. You just steadily move up. It's steady accumulation. There's a lot of interest in power and power generation and power equipment. And important to remember, there's two parts to this now, which is one side is you may see electrical facilities get damaged in the war, but the other side of which is that there's just a lot of underlying demand for electricity from the whole AI side as well. So you're seeing a point where infrastructure is vulnerable at a time where demand is growing like crazy. And as I said, this is the highest ranked North American large cap stock.
I was just about to ask you that. I just check up on that. You said that's the highest ranked.
It's #1.
Wow, that's crazy. Yeah. I mean, if you see that chart, you can see why. Okay, your last one is an ETF, so BMO Equal Weight Oil and Gas ETF.
Yes.
Kind of self-explanatory, but why do you like this one?
Absolutely. So we are looking at in our ETF universe for the ETF funds we advise for BMO Global Asset Management. We do an ETF universe as well, and we look at broad-based, and we look at country ETFs, and we look at sector ETFs. And something that was really interesting was at the beginning of the year, the top of the rankings were dominated by metal ETFs, by precious metal ETFs and base metal ETFs and physical commodity ETFs, and they all rolled down after the start of the war and were literally replaced at the top of the rankings by oil and gas ETFs. So this is one that we actually do hold in the portfolios, and we can see that, like the energy sector in general, was pretty quiet through the last year. What's intriguing about this, and something that we noticed through relative strength, was that relative strength started to move for the oil and gas sector ahead of the war. In this case, we can see it starting to go in January. And we were sitting there in late January, February going, okay, the relative strength rankings are telling us that all these oil and gas stocks are moving up like crazy, but the price of oil is still at $65, $70. But that's what relative strength told us, was capital was moving into the energy sector ahead of the war and ahead of the commodity price. And oftentimes you will see, I talked about stocks leading fundamentals, stocks lead commodities as well.
Interesting. Okay, that's a very interesting note. We'll have to leave it there because we're out of time, but Colin, appreciate you coming in today. Thanks so much.
Thank you very much.
And thank you for watching. Market Call Trading Day is coming up next with Roger Peterson. Stay tuned.